everyone. My name's Dan Murphy. I'm from CNBC. Welcome to our panel as well. First of all, I just wanted to say I've had the privilege of interviewing Sushan a number of times on CNBC, and she's seriously talented, and she is a hard act to follow. So I'm looking forward to having this conversation. Our question that we're going to be attempting to answer in this panel is protection disruption. And the question is, how technology has changed the way we manage risk and reinvented the way insurance is sold to consumers. So a number of things to think about as we have this conversation. First of all, new technologies are clearly transforming the multi-billion-dollar insurance business globally. And for some industry players, it's a threat. But for others, it's also a big opportunity. So for this conversation, I want to look at it basically through the lens of the latter. Because in Asia, we've been on the front line of this, with China certainly taking the lead, and the Zhong'an IPO recently is a case in point. So this is a massive market for startups and for incumbents to embrace new technologies. And that new technology is leading to the creation of new tech-enabled business models and products in the insurance space. For the incumbents, we now have technology that helps to reduce risk. It also helps to innovate and to enhance distribution channels. And in most cases, the digitization of insurance helps to reduce costs and, above all, benefit the end user. So let's start with a round of introductions. Again, welcome to our panel. Dr. Andreas Braun is the Managing Director of Accenture Technology. He brings a wealth of experience into that role from Allianz and GfK as well. So welcome, Andreas. Thanks for being here. Parul, the Director of Pinbox Solutions, is doing some amazing work on inclusion. If you haven't read about Pinbox Solutions yet, you should have. She's also CNBC alumni as well, so she holds a dear place in my heart. And Benoit Claveranne is the Group Chief Transformation Officer at AXA. AXA was actually the first major insurance group to offer insurance using blockchain technology. So we're looking forward to hearing about that as well. So I wanted to get, first of all, a 30,000-foot view of the situation out there right now. And Benoit, I might go to you first on this. Where are we today, and how well advanced is the global digitization of insurance?
Thank you, Dan, and good afternoon to everyone. I think it's been already quite a journey. We have our fair share of experiments and failure. I would say we have gone through different phases, and this phase can coexist together. The first phase has been around adapting our existing solutions to the digital era. So I would say, as such, there was not, and there is not a change about what we do and how we do it. It's more we put it digital. The second phase has been around how we upgrade what we have. And here, this is where I think that we have started to feel the impact of the digitization, because it has forced us to upgrade what we have, because simply it was what the customer was expecting. And maybe, and this, especially for this audience, this is the most exciting part, we have entered a third phase, where actually we embed the technology from inception to the way we conceive things. So you were referring, for instance, for this blockchain initiative that we took. I would say we indeed launched a product recently where we are insuring people against flight delays in a parametric way using blockchain technology. The difference with the past is that this time, when we conceived the solution, the technology was here from day one. And I think this is where today the new wave of thinking of digitization is happening. Similarly, a couple of days ago, we announced in Asia that we were offering the first insurance transactional API solution to whoever partner was interested to do business with us. This is the kind of thing that many years ago we could not even think of, and which today are becoming mainstream.
So the first question that comes to my mind after hearing that is, how do you make sure that that new technology is built in, not just bolted on?
There are many conditions. One of those, and we were discussing that a bit with Andreas before entering on stage, is you have to change the way you are organized. It might seem maybe weird for those in this room who only have a startup, but if you heard the previous speaker on DBS, look at a group like AXA. We are more than 30 years old. We have 165,000 people working for us. We are present in 65 countries. We are present on all the businesses that you can imagine. the question around how we have to change fundamentally the way we organize is the most critical one. One thing is to have a technology. Another thing is to have an idea. But how you find a way to blend these together and making it really happen, changing the way the processes have been forged for decades, is a major challenge.
Andreas, have you got a view on that? And do you think the digitization of insurance has helped or hindered the customer experience?
I think the digitization of insurance helps the customer experience definitely, because insurance companies typically started with more or less traditional use cases like fraud analytics and so on, but they quickly learned that you can turn those around. For instance, most people don't fraud, but many people are good customers, and if you take turn around fraud, you have wide claims and can serve customers faster. So there's a lot of opportunity to use insurance to improve underwriting, to ask less questions, to make everything quicker, to save money, to improve processes, and that all helps customer experience.
Parul, what's your view on this?
Well, the customer base that I work with is a little different from the gentleman on my left and right. Hence, insurances and pensions is a space that I work in. Words don't resonate with them quite easily. So much that the customer base that they're talking about, it could be a pull product. But for the customer audience that I'm talking about, it's pretty much a push product. So it could be a farmer who's sitting with $1,000 under his pillows in the hope that that his cow is ill and is going to die, and he'll have to purchase a new one. Well, the access issue is that if he did have insurance and somebody did educate him well, he could actually go out and get that and suddenly have so much money free for current consumption and future savings. So the customer base and the access and the way you approach the same problem could vary depending where you are.
And Parul has a number of slides that she's going to be showing later on as well as part of a presentation on Pinbox and what you're doing in the space at the moment. A question for the gentleman, though, I also wanted to ask about this. How are some of those proven accelerators that you've spoken about, like cloud, new IT, machine learning, and AI, changing the way that you do business in this space? Andreas, I might start with you.
Well, the technology is definitely a game changer because it opens up a lot of new possibilities with customers, but also using data more efficiently, improving processes, saving a lot of money, and ultimately optimizing underwriting and everything. So technology is a game changer, but for insurance companies, it's quite a challenge to plug this new technology into the very old companies sometimes, and their very old IT stacks. So what we see very often, the use cases are successful. You had the same example earlier on where we said, okay, most of the use cases, we don't really very often see use case examples or POCs that total fail, but to implement those into the legacy organization processes is very difficult. And whenever the new approach hits really the rubber, where you work with the people who are there with their processes and understanding for 40 years or more, like in underwriting, actuaries and so on, then it gets really tricky.
Benoit?
I would say for me the main route for the whole evolution is not the technology itself, but rather the fact that the technology gives the power back to the client. And this is what changes the whole ecosystem and therefore forces us to look differently at those technology. I would say for the first time, at least in our industry, the client is taking the power over how he or she wants to interact with us, and he or she makes decision at every stage. Therefore, our technology is not anymore a technology to support the existing organization or the existing process, but rather a mean for us to meet what our customer is expecting. So let's give me maybe a couple of examples. The first one you mentioned, the cloud. So at AXA, like anyone else, we're convinced around the fact that we need to move to the cloud. But when you are an industry like us, highly regulated, where, and maybe we'll talk about that later, where the clients have legitimate expectations around how we handle their data, you need to have an ecosystem that on one hand allows you to benefit from the most recent market innovation, and the public cloud with the well-known players give you that opportunity. But at the same time, you need to develop your own system to secure your own internal processes. This is why at AXA, we have invested $250 million US on developing a private cloud system worldwide to have that system internally to ensure the information security and so on and so forth. Another way to look at it, to your question, is on the efficiency gains. Where technology offers a land of opportunity is that it can drastically simplify our processes and increase our productivity. Not far from here in Malaysia, all our health claims handling are being done through what we call robotics process automation, which accelerates drastically the speed at which we can serve our clients. Lastly, on artificial intelligence, and I'm sure we will come back to that maybe later, I think on one hand, it's a fantastic innovation, and like everyone and many in this room, we are doing pilots and we are implementing solutions to make it happen. But back to this organizational challenge. If you have a stupid process in your organization and you put artificial intelligence software on it, it only becomes an artificially intelligent, stupid process. And therefore, there is a lot of work to be done to change that beyond the technology itself.
Let's talk about data as well, and I know you'll all be talking about this because this is a huge area for all of you. Insurance and data are intrinsically linked. So let's talk about how insurers are creating value, assessing risk and managing pricing using data. And Parul, I might go to you first on this because you also have a very unique experience here. How is data and your use of data tailoring the experience at Pinbox?
So most of the data that we work with, we work at a country level. So the countries that are currently, supposing I'm working in India and Rwanda and Uganda, typically the data is derived from the FinScope report that is already been done in those countries. To derive more conclusive insinuations from that data actually comes from the government itself. So we take a lot of data from National ID where it exists. We take a lot of data from the labor departments which are validated. However, what is always skewed in the income group, which is a lower income group that I work with, is that nobody really correctly admits to their income in the right numbers. So if I were to buy an insurance product, I would give the right representative of my income because I want an equivalent of what I require. But the customer base that I'm talking about, they never declare how much money they earn, and hence don't have an accurate product that is designed for them. And hence on the policy side, the data exists, but is not really utilized in the right way to design products for them. So the decision comes at a policy level and cross-pollination of thought processes that go between countries addressing different problems. So just an example, if I give you, countries like India completely have banking, have now got an overdraft on their bank accounts. They also give insurance on the low income accounts. So their data is robust and is running on National ID. Everything is digitized. But countries like islands like Fiji, who don't even have mobile connectivity very well, and they don't even have National ID. So how do you then go out and sell products to them? So they're still paper generated and still working on, say, prepaid card solutions, which are closed loop for the unbanked. So it depends on what kind of access and how you use that data on the existing countries, or countries like Rwanda, who are now coming up with new products and insurances, but their data again is based on the history of biometrics that they have on their ID. So our data collection points are a little different and managed differently.
Andreas, this is one of your areas of expertise, and I think it's fascinating because data is almost like this double-edged sword, because on the one hand, it definitely enables these Insurtech players and also traditional players, but at the same time, you have to have a customer base who are actually willing to give that data up. So how do you build trust as an insurer?
Well, yeah, Dan, you're actually right. So the challenge for the traditional insurers is that they have now new possibilities with a lot of customer-specific data, very, very fine-grained data. We speak about the segment of one or lot size one, where you really can understand one customer into very much detail. When we started at Allianz, the data cloud, back in 2015, that grew to the date to 5 petabytes of new data about customers. So on the one side, huge new possibilities on data and machine learning and AI. On the other side, you get increasingly difficult and challenging regulation, especially about data privacy and data ethics. In Europe, or at least for all European citizens all across the globe, you have the GDPR now, the General Data Protection Regulation, which is a very complicated and complex set of laws and regulations that steer very precisely how you can work with data, and it turns around the previous concepts of data protection from opt-in to consent. So it is not about the data that is to be protected anymore alone, it's about what you do with the data. Hence, it connects data to the analytics, the what. And for instance, to give an example, to use your name and birth date or address for one purpose, like sending you the invoice, is totally legal, and that's covered by the law automatically. You don't have to give consent for that. But to use that for underwriting is illegal. I have to have consent for that. Or to use your data for customer understanding is also illegal unless I have consent. So this creates a huge complexity and limits the new possibilities. But on the other side, it's also, I think, quite good, because when we started, for instance, with telematics, we saw that a lot of things are unintendedly possible. So, for instance, we did back in 2014 an internal telematics test, and we found out with volunteered employees that people have wives and mistresses, and you see that just in the data, you know, from where people are going. You see that you tell us you don't smoke, but actually you stop at cigarette shops a lot. And so you get a lot of insight, and machine learning will find that, and you, it's very dangerous, and now it's regulated.
It's fascinating. Benoit, can you explain to me parametric insurance and how it's changing the landscape?
I think it's too soon to say that it's changing the landscape, but indeed, I was mentioning earlier, I think there is this collusion or this coincidence of ideas that have been in the brain of many smart actuaries for decades, but which have been made possible by the technological revolution of, say, the past 10 to 15 years. It's a conjunction of having for instance, the satellites that gives us information around what's going on, and especially in those countries which are the most vulnerable to natural catastrophe. And on the other hand, the ability to have a sort of a very automatic way of doing the insurance. It's a sort of a 1 or 0 event, if you will. And there is not the complexity that goes usually with the insurance. So this is why, for instance, we developed parametric insurance in another country near to Singapore, in Indonesia, because for the farmers, I mean, I think this is something that is dear to your heart, who have their whole annual income depending on a given crop, the ability to insure them in a very automatic way and pay them the claim in a very rapid way is absolutely critical. So that's the parametric insurance. And as I said earlier, once you are capable on top of that to add a technology like the blockchain, this is how we came up with this solution that we call Fizzy, that is available if you travel to Europe, where even before your plane lands and that the pilot of the plane authorizes you to open your iPhone again, there is an automatic information being sent to us that your plane, for instance, is more than 2 hours delayed, and it automatically generates the claim payment. So you can see that it's a fundamental change in the way we apprehend the customer experience and the processing of the claim payment.
And telematics is also really interesting as well, because if you have a look at the auto insurer example, which they're really ahead of the curve in most instances, you're able to insert devices into vehicles that can track whether or not you're speeding, and then you're able to be priced accordingly. But as you were saying before, Andreas, you know, often it's not always the case. There's a lot of outliers in that data, and insurers often struggle to sort of price accordingly, right?
Yeah, there's a lot of challenges, and insurers need experience with all these new things. In data science, you know that you can easily jump to conclusions, and that's why actually you need a data scientist to find out whether something is correct. And if you have rule-based assumptions that speeding leads to claims, that is probably not true. For instance, it's overshadowed by other incidents like playing with a smartphone or so. That's way more dangerous. And if you take cornering and acceleration, if you play with your smartphone or if you're drunk, you don't corner a lot and you don't accelerate a lot. You drive quite smoothly, but still it's extremely dangerous. So this all has to be adjusted then to the new reality.
There's also a lot of new forms of insurance that have been enabled by this data as well. And if you look at the Zongan example that I mentioned just before, when it first launched, it was selling binge drinking insurance, which I thought was interesting. So it would pay out if football fans watching the World Cup needed some medical attention. And then at the same time, it also had what was called high heat insurance. Basically, it reimbursed customers when the temperature hit 37 degrees. So it would be totally bankrupt in Singapore, but certainly just a nice way of sort of capturing some of these examples. So let's shift over to our next topic. And Parul, I think you can take the lead on this one, because going digital is a formidable way to address exclusion. I've been doing some homework, and right now 1.2 billion, mostly young, non-salaried workers in Asia, Africa, and Latin America are excluded from formal pension arrangements. So tell me about some of the work that you're doing now to fix that.
That is actually going to come up in a lot of the slides that I do, but I'll touch upon it any which way. The urgency to address this issue is paramount, but for any pension inclusion or for insurance inclusion. However, somehow this problem is being seen as a problem of the future. However, it is a problem of today, given that we have 1.2 billion people in this world who are in the current workforce and will never be ever covered by formal pensions. How this is actually addressed is through a lot of policy and advocacy that we at Pinbox do as well. I hope there were more people in this space, but currently we seem to be the only ones. And at a policy level, we try and convert the governments to address this issue. There is an urgency, the governments are very much interested, but they somehow seem to be at sea in terms of the product design to address them and to also monitor using technology. So to answer your question, Dan, technology is an integral part of inclusion. The reason is because they have to be built for a long-term sustainable program, and technology is the only way to do it. Currently, to serve this cohort of people, billions of dollars is being spent on a one-to-one interaction, which is far too expensive. And remember, this cohort is highly portable. They're in and out of jobs, and women are exceptionally more vulnerable to this. So how is it that this can be addressed is only at a country level, because more than technology, technology people can still adapt to. What they grapple with is a trust issue. So how is it that they're going to trust a product which is coming from a private player? They're anyway into lots of Ponzi schemes, and they don't know how to trust any sort of insurance. So the government comes as an answer. Whether they trust the government or not, that's another question. But they tend to trust government more to deploy these products. And hence, at a government level, technology needs to be adopted. We have seen examples of successful technology being implemented through M-Pesa in Kenya, or through what Andhra Pradesh government is doing in India through their PDS network, where fair price shops are actually completely digitized through biometrics. The ration is taken through biometrics, and the money is also collected through biometrics. So we've actually run around using existing infrastructure and worked in, as one example is in Vijayawada in Andhra Pradesh in India, where pension products were sold, which were government products given through complete biometric digital format, paperless, cashless, to a large cohort of people. This is a project we did with the World Bank. So there is hunger for technology and access. If you think that this cohort of people is not thinking of old age security, they are, but they seem to be not having access to it, which is again a policy decision of every country who needs to wake up to do this.
Do you have any videos that you wanted to show us now?
I would, if you allow me to do my presentation, I'll do it in the same flow, if that's okay with you. Do you want me to do it now or later?
For sure, no, let's do it now.
May I request you to please pull up my slides if it's, there it is. So we're Pinbox Solutions. Pinbox actually stands for pension in a box. May I get a clicker, or do you want me to ask you to change the slides? Okay, you can just, next please. You know who I am, next one please. Right, so I'm going to put in what is the problem that I'm actually grappling with. Like we discussed briefly, there's 1.2 billion people in this world who are in the workforce in developing countries in Asia, Latin America, and Africa who are out of this, any sort of an inclusion. But with increasing life expectancy, people are living longer because of better health issues, but most of the 20 years of their lives before they're actually do not exist anymore, they're going to live in poverty. And there is an urgent policy and regulatory environment to address this. So what are the kind of people I'm actually talking about? I'm going to show you a video. May I have the first video, please?
गीता गुप्ता नाम है, छोले भटूरे बनाते हैं। यही देखा है जो बहुत सी डोगरी रोती हैं, चौक पे खड़े हैं रोती हैं कि हमारे बच्चे परेशान कर रहे हैं, हमें खाना ही नहीं दे रहे कि हम भूखे हैं। बहुत देखा है कि हमारे तो अभी इतने हैं ही नहीं, हमारे तो छोटे छोटे बच्चे हैं, अभी कोई उम्मीद नहीं है और इसमें भी खर्चा पूरा हो नहीं रहा था।
ठेली चलाता हूँ, सुबह को लोड किसी दुकानदार को लोड मिल जाता है, वो डाल आते हैं तो करीब 15 रुपये 20 रुपये कुंटल 30 कुंटल देते हैं भाई। अब ढो के बस महीना में 200 बचत हो जाती है, उसमें डाल देता हूँ, अपना खाना को गुजार कर लेता हूँ। बुढ़ापे में नहीं कर पाएगा, बुढ़ापे में नहीं हो पाएगा।
मेरा नाम ज्वाला प्रसाद जी है, उम्र 63 साल है। मैं 10-12 साल से यहाँ रह रहा हूँ, कोई सफलता नहीं मिल रही। अब मेहनत कर रहा हूँ बराबर, अब बचत नहीं करी, मतलब उसी में रहे, मेहनत करते रहे, खर्च करते रहे, अच्छा खासा खर्च करते। आज खर्च करने की उनकी स्थिति नहीं है। 2-3 बार मतलब नाश्ता वगैरह करते हैं, अब किसी दिन एक दिन रोटी नहीं भी बनती है। समय ऐसा हो जाता है, पानी बरस गया, काम नहीं हुआ तो खाली लेटे हैं।
पहले क्या जवानी में चाहो कुछ ही करते थे, कितनों कर लेते, सुबह से 12 बजे रात तक करते रहते। अब कैसे कर पाएंगे, इतने हाथ पैर में ताकत है। अब तो बुजुर्ग हो चुके हैं, अब उतना नहीं काम हो पाता।
मेरा नाम शमीम बानो है, मेरी उम्र 62 साल है और मेरे 2 लड़के हैं। दोनों लड़के शराबी हैं, शराबी टंटारी हैं और हम मियाँ बीवी अलग रहती है। मैं तो यही सोच रही थी जो कमा रही हूँ वो बचा रही हूँ। अब मुझे क्या पता था कि आगे चल के हमारी किस्मत खराब हो जाएगी। हम तो अपने बच्चों पे लुटाते रहे, खिलाते रहे, कमाते रहे, पालते रहे। बहुत हमने भी काम करा दिल्ली में, फैक्ट्रियों में जब हम जवान थे, जब हम भी खूब काम कर करके बच्चों को पाला। और तो और हमने लोगों की लैट्रिन तक फेंकी अपने बच्चों के खातिर। आज वही बच्चे हमारे ऐसे निकल गए।
Clearly, this is a huge problem. Can you go to the next slide, please? So the 2 things that we see from these videos: A, the urgency to address the problem of old age security. And second, obviously, God, children, and Kismet are not exactly strong portfolios for old age security. So something needs to be done for this cohort of people. Tax funded, you would say you could use taxes to use it, but it's not an issue because most of these countries have less than 7% of their people actually contributing to or actually towards any formal pensions or under formal or paying taxes. As a result of which, you have about 80% of the population in across Latin America, Africa, and Asia who have large informal workforces. And to give this current people, 1.2 billion people, any sort of a meaningful pension, even $1 a day, you're looking at spending about $450 billion a year to be able to sustain them. But if these people start actually saving regularly, you could actually have a fund or a corpus amount of about 1 trillion, which could then feed into employment or economic development and so on and so forth. Next slide, please. So what are the initial challenges that we are facing? Most of them are in remote areas, irregular incomes, in and out of jobs, frequent migrations, low literacy, still lower financial literacy. They have KYC challenges. They don't have documents to prove who they are. They have negligible experience in formal finance. And even if they do, they're not really happy with the experiences. And mandatory coverage is certainly not there. Next slide, please. Women are extremely more vulnerable. They come in and out of the workforce. However, they are better savers. They're going to outlive men, but they're going to live in poverty. They work and they're not really paid for it. So what are you expecting these women to do in the first place? Next slide, please. So what can developing nations do? They can harness their existing IT, any payment system to grapple with, to create better policy and integration, to come up with products for them. What they can also do is harness and use professional help to get fund management, to get better robust markets, and use management tools to create such things. The third thing they need to do is wake up every morning and get into a mission mode to solve this problem. India was able to open 250 million bank accounts only because they got into a mission mode. I have to tell you this little story, why we say a mission mode. I was sitting with the gentleman who actually was responsible for opening these bank accounts at the government of India. And he had this big Guinness Book of World Records sign saying maximum number of bank accounts open. So I said, Mr. Pandey, fantastic. He says, no, you know what my bigger worry is? Having another Guinness Book of World Records saying maximum number of dormant accounts. So that is why these, even if there's financial inclusion roadmap being made, but is it adequately used for insurance and pensions, is the way forward. May I have the next slide, please? So most of the building blocks in most of the countries exist. They do have a strong policy commitment. They do have national ID. They have a latent demand and capacity to be able to do it. They do have regulated insurance markets. They do have, some of them do have strong markets. They do have national ID, mobility, payment systems. So if you're able to see in this grid, only two little things that are not there. Some of them don't have national IDs or any sort of KYC that is done by the government, or they don't have robust markets. Rest, the conversion is already there. So what is actually stopping these governments to actually get into pension inclusion and insurance inclusion? Next slide, please. So the missing piece is that the policy conversion is there. There is an ecosystem that has been built by financial inclusion by bilateral and multilateral agencies and larger organizations like Gates. However, there is no technology to bring all this together for this cohort like a glue. So there are solutions, but they don't seem to be coming as one place, one-stop shop for this person to actually go for their needs. You need to go some solution on a mobile, some solution which is on a tablet, some solution which is 20 kilometers away. They need to go to a bank to do it. The bank is not interested in entertaining them because they're not supposed to be making money out of them. So how is it that you actually deploy such things? So this is where Pinbox comes in the middle. We are a white-labeled IT platform which offers administrative systems to governments to deploy such things. Next one, please. So what is it that we actually do? We create a pension and insurance mass market, which automates processes in terms of onboarding customers and also be able to deploy them products such as insurance and pensions. We issue individual based accounts, which is very important because currently we've seen that the customers don't seem to have individual accounts and numbers keep changing from one product to the other. We provide real-time data and real-time MIS. So, and that is one problem that every government grapples with. They don't know who their customer is and they don't know where their customer is. And when this customer has a problem, he doesn't know where to go. And when the government needs to give them on something on maturity, they don't know where the customer is. Hence, this is a critical part of what we do. We give a technical assistance in terms of diagnostics. We do a supply-side mapping and a demand-side mapping for a nation. We're currently working in 5 countries in Africa and 2 in Asia. And we create financial literacy tools and mass market to be able to deploy such and create awareness. The third thing is that we create Pinbox communities. We have a book which is recently launched, and we also have conferences that go around across the globe to bring up the issue of pension inclusion and insurance inclusion, riding after the next step after financial inclusion. Next slide, please. Our recent work, like I said, is in Rwanda, India, Uganda, Kenya, Bangladesh, and we're doing 2 projects in Uganda and 2 in Bangladesh. All of them are working with the governments typically. Ministry of Finance is the one that we work with, the Ministry of Social Development. In Bangladesh, we're also working with BRAC, which happens to be the largest NGO in the world. Next slide, please. This is the book I was talking about. It's got about 20 countries who are talking about experiences on pension inclusion and insurance inclusion in their countries. And we have thematic chapters which are talking about how should fund management happen, how should payments happen, how should national ID be linked, how should financial literacy be thought through. Next slide, please. This is one of the, I'm giving you just one example because I don't want to take up too much of your time, but one of the examples that we ran in India was with domestic workers. We have about 40 million domestic workers in India, which is larger than the population of Canada. Sorry, I come from India, 1.2 billion people, 40 million is nothing. Most of the women are in this cohort. They have frequent migration. Today they're working for me, tomorrow they're working for Dan, day after they've gone back to their own village and nowhere to be found. The demand aggregation could produce lower costs, but domestic help are traditionally not members of any union or group, so you don't know how to find them, and the cost of finding one individual domestic help in one house is far too expensive. Their financial literacy and literacy levels are very low, and they seem to be coming out of the workforce in terms of reaching out to them, educating them, sending them emails is not an option. So what is it that you can do? We actually came up with a solution that was people like you in the room could actually do. I'll show you how this is done. May I play the video, please?
We only have about 5 minutes left, Parul, so I'd like to get some questions in as well,
video.
if we can.
Yes, please.
This is Shanta. She's 22 years old. She lives in a little village far away with a husband and 3 children. But her family struggles to make ends meet. So Shanta decides to migrate to your city in search of work. You employ her as your maid. She works long hours. She takes care of your children. She cooks your meals and keeps your house clean. She sends most of her income back home to support her family, to put food on their table and send her children to school so that they may have a better life than hers. She does this year after year after year. When she's too old to work, Shanta returns to her little village. Her children are now grown up. They are educated and married but have migrated to other cities. Shanta and her husband now live alone. But with no savings of their own, they struggle to make ends meet. They live without dignity and will live this way for the rest of their lives. But does it really have to be this way? Let's see this again. You employ Shanta as your maid. You talk to her about the importance of setting aside a small part of her income for her old age. And you spend just 10 minutes on the internet to help her open her own micro-pension account. And so, Shanta starts saving every month for her old age. Her savings are managed by the likes of LIC, UTI and SBI and will grow over the years. When she's too old to work, Shanta will return home to her little village. She and her husband will still live alone, but they won't struggle to make ends meet. Because of Shanta's micro-pension savings, they will now get a monthly pension and will live with dignity for the rest of their lives. This could be the story of your maid, your driver, your gardener or guard. Just 10 minutes of your life changed 20 years of Shanta's life. You can be that change. Gift Shanta a micro-pension account today. Her clock is already ticking.
So this is... Thank you. So this is one of the solutions that we did. Now we're scaling it to a global level. Well, people like yourselves in the room will be able to tie up to some country, to a community-based organization, choose the person whom you want to gift a pension to, and perhaps we do it at a global level. And if this is done, we can actually reach 10 million people by the weekend if every one person in this room and outside is able to gift pension to just one person. Thank you.
Thanks again, Parul. And make sure you have a look at the Pinbox website. Very, very important. And thanks for your presentation. As I mentioned, we have just a couple of minutes left. So let's take a couple of questions from the audience now for our other panelists. And maybe if we pull up this question first. This has 2 votes. So the question is, how do you integrate big data and its dynamism into actuarial pricing without losing economies of scale in your offering? Who'd like to take that question on? Take it away. Andreas?
Well, obviously big data helps a lot with actuary and underwriting. What I don't quite understand about the question, what economies of scale means in that respect. I would assume that probably if you go to the segment of one, this creates the challenge, you know, that you outprice a lot of people, that you go, that you have not enough people anymore if you create too fine-grained segments of the risk patterns, which remains a challenge, obviously.
Maybe I fully agree with Andreas, and I would add, I think here as well, the issue has been a bit evolving over the years. I think that we have all talked a lot about big data. All the big firms have developed the infrastructure to support them, the data lake, etc. We're building it in with a regulation that is evolving extremely rapidly. The challenge that we have on a daily basis is more how do you make that data available and relevant for each client? And how do you make it a real difference for the client? And here I would say, if you are in a true digital environment, in a true digital interaction with your client, then you can unleash the power of big data. And this is where all the visions around the role of machine learning and artificial intelligence come into play. And here you can imagine many, many things, from the poorest to the wealthiest. Where we don't see a revolution yet, I would say, is more on the traditional ground, where it's more of a smart data approach, where it's more incremental. It's having an impact, and a positive one, by being more granular, being closer to the needs of a client, but it's not the big revolution than once could have thought maybe some years ago. The challenge that we all have now is how you mix your internal data with the external data and the public data. And this is where, as well, there are new avenues of innovation that we can contemplate, and here that's really thrilling.
If I may just come in, we always say that data is actually imperative, because the customer experience has to be quite smooth and not like going to a dentist. And that's when data comes in, because you have to make it thought through from the customer's point of view and design to use data like that instead of it being the other way around.
I would add big data always improves the customer experience, or at least it can be used like that. For instance, we implement a solution where we reduce the questions asked for household insurance from 18 questions to 1, and that is only the GPS position. So you can use the phone and say, I want to insure where I am, and then it would use external data to enrich, and then you get just the same price. So customer experience is a very obvious use for big data.
Another question from the audience is this. What do you think are the innovations that need to happen to improve risks and help insurers select and manage their risk exposures? This one kind of looks ahead to the future.
I mean, it's a very broad question, and it can be tackled in many, many different ways. Maybe I would take it this way. And maybe because this is a fantastic event sponsored by MAS. I think that today we've had in the past 5 to 10 years 2 very huge waves in parallel. The wave of regulation for the financial institutions in the aftermath of the global crisis that we had, and the technological revolution that we've been talking about for an hour now. But somehow the two have not been well combined yet. In other words, the regulation is still reflecting on how to tackle all this new technological evolution, and technology is inventing itself or innovating itself without a clear conscience of the regulation. Let me take a very concrete example, and now maybe there are startups here that could solve that problem. In my view, if one of these startups here solve that problem, it can be a game changer for the whole financial industry, banking, and insurance. Is the following one. The regulation now, it's all about, rightly so, knowing your customer. So it's all about having the right questions and the right data to make sure that you address the very needs of your clients. For everyone that has been in that experience, either on the seller side, on the buyer side, as of today, it's a very cumbersome experience. Okay, it's all about asking you, what's your name, what's your date of birth, where do you live, and I'm going to take a paper and write it down, or I'm going to do on iPad. But in any case, it's going to be an experience which is going to last between 10 minutes and 1 hour. It's not going to be a right one. When you truly look at the potential of the technology today, you could think of a system, a vocal system, where there would be intelligence gathering all the information, and you and I would be having that discussion, and the machine would understand that your name is Dan, that you were born there on that date, etc., and that therefore all this part of the cumbersome of the process would disappear and would be treated. For me, if there is a startup here in this region of the world which is going to find that, I can tell you the banks and insurers are going to queue to buy that solution.
That question also has probably a visionary part, and the history of insurance has been to use basically descriptive analytics, technically speaking, that is to use data to understand what happened in the past and then offer a cash settlement for damage that actually happened. I think using new technology, big data and so on, looking forward, you can also use it, and that is the risk element in the question, to mitigate risk or actually avoid risk. So you can predict that something will happen and go wrong. You can influence, and then you try to mitigate the damage or actually avoid the damage, and that could be the game changer in insurance. So for instance, in car insurance, I know for a fact that a couple of car manufacturers are currently building predictive analytics into the car, so the car avoids an accident. The most simple approach is BMW has a solution where the car records all the streets and all the street situation. They call this learning maps in real time. And if one car has an accident, all following cars would automatically know that there's a dangerous situation, not having an accident. Insurers can plug into those systems or similar systems. We did something for health insurance for diabetes, for instance, to mitigate risks in the case of diabetes or actually avoid that something really goes wrong. And then you have a game-changing advantage if you can do this.
There's another angle to this. I think technology plays differently for developing countries and developed countries, but this is could be a misplaced notion as well. So countries like Japan, in fact, I was talking to a gentleman right here, only 30% of their population has a national ID, whereas a country like Rwanda, 96% have national ID. So to integrate new systems for insurances, Japan finds it more difficult to do it because the population is old, who doesn't want to change to technology. But countries like Rwanda and India, who are younger countries, and an environment to adapt to better technology, hence implementation for data is much easier. So it's relatively speaking as well.
Okay, I think we're out of time, so we'll leave it there. But thank you so much to our panel for joining us today, and thank you all for your questions. We appreciate you listening in. Thanks again.